Hi, I want to welcome everyone to our webinar. I'm Sarah Holloway. I am the Interim Program Director of the Masters in Nonprofit Management at the School of Professional Studies at Columbia. Thank you all for joining us. I know some of you are still joining. I can see the numbers jumping up. Just want to quickly thank the organizers of this event, which is a three-part series: Ramone Segree, John Hicks, and Leah Heister-Burton. Together, they developed a three-part series to explore the potential impact and potential risk of cryptocurrency on nonprofit philanthropy by providing new and innovative revenue streams and that potential. And this series will explore both the potential and the potential risks, so challenges and opportunities, by tapping into the expertise of nonprofit leaders as well as donors. I'm going to quickly introduce our panelists today. We have Alex Gladstein, who is Chief Strategy Officer of Human Rights Foundation; Patrick Schmitt, who is co-founder and co-CEO of FreeWill; Karen Gano, who is a lecturer at our school and also the principal of Gano Nonprofit Services; Diane Clifford, Managing Director, Constituent Development Operations at Share Our Strength, No Kid Hungry; Lisa Zola Greer, who is a philanthropist, an entrepreneur, a convener, and the author of Philanthropy Revolution; and Mark Ulrich, who is co-founder and CEO of every.org. I want to turn it over to our faculty member and one of tonight's organizers, Professor Ramone Segree, who will facilitate this evening's discussion, which is entitled Opportunities and Challenges for Fundraising. Again, part one of three. But before I do, want to just share with you Ramone's very impressive bio. Ramone has been teaching with us since 2008. He is currently the U.S. Executive Director of Women for Women International and has an impressive long resume in the nonprofit sector, including major leadership positions in higher ed, such as CUNY and NYU Langone, in the arts, and is a former leader in his own consulting firm. He has also served on numerous nonprofit boards, including being board chair of the International Association of Fundraising Professionals Foundation for Philanthropy. And he received his EDD degree from Teachers College here at Columbia. So thank you so much, Ramone, for your leadership on this, and I will turn it over to you.
Thank you, Sarah, and I'm so happy to be a part of this. It's a very, very important topic to the nonprofit sector. We're motivated at the School of Professional Studies Nonprofit Management Program by this topic and wanted to bring it to our internal and external friends and students to assist with learning, to assist with practice, to assist with innovation. We don't have all the answers, but we're going to be exploring questions in this session and the two sessions that are going to follow. We know that there is an explosion with respect to cryptocurrency. It's growing in popularity. It's a tool of exchange and investment. We're learning much more about it, and we thought that we would assemble experts, names of which have been mentioned, to help us as we move along. I want to contextualize a bit and provide some background information. As I've said, this is a new medium of exchange as well as communication. It's squarely in the digital space and squarely in what is known today as Web 3.0 or Web 3. You know, we've come through Web 1.1, which is, reading, so to speak, static pages. Web 2, reading and writing, platform for content. And now Web 3, which is a combination of the reading and writing and now owning data and content through decentralized means. In this field, this nonprofit field, we've advanced tremendously, and particularly as it relates to technology. In the space of direct response, we've gone from offline to online communication and squarely in social media. Also, online giving has exploded and become the norm. In fact, 13% of all giving last year, $61 billion, was online. a 21% growth over the previous year. The volume of crypto giving jumped from 4.2 million in 2020 to over 69, almost $70 million in 2021. This is a 1,500% increase. And last year, the average giving through crypto giving was a gift of $10,455, with the average going to each nonprofit about $64,644. And by the way, that $64,644 to each nonprofit is about a 66% increase over last year. Talk about opportunity in this space. The Pew Research, or I should say that Pew Research has provided for us that there's a market cap for all cryptocurrencies that's reached above $3 trillion last year, with $33 billion in venture capital investments in crypto and blockchain alone. So as I say, we're advancing through the School of Professional Studies, nonprofit management program, our understanding, our teaching, meeting the needs of the sector, as well as the needs of our students for now and also into the future. So as Sarah had indicated, basically over 3 days, we're going to basically be looking at cryptocurrency and nonprofits, new frontiers, and new challenges. Today, we're going to be exploring opportunities and challenges for fundraising. The two speakers today will be Alex Gladstein, Chief Strategy Officer, Human Rights Foundation, and we've asked him to give us a look into the history. How did we get here? How's the sector using cryptocurrency? We also have today Patrick Schmitt, who's the co-founder and CEO of FreeWill. And we've asked him to talk about how organizations can be prepared and what does it mean for gift processing. The other speakers that Sarah mentioned will be involved in our second, that is our July 7th series, Organizational Considerations, taking a deeper dive. And then the third one on July 14, The Road Ahead. What does the future look like? So the format for today is that we invite you to place comments or questions in the chat. We also invite you to include questions in our Q&A area on Zoom. What we will do is we will ask each of the panelists to introduce themselves, give remarks, and we would ask also that they will dialogue between each other. And don't be surprised if I also jump in. And then while that's happening, please, we again encourage your questions, your thoughts in the chat, and then also your questions in Q&A. This is being recorded. And we'll have a summary at the end, and we'll remind you of Series 2 and Series 3. So with that, let's get started. And first, I'd like to invite Alex to give his comments. Alex, please.
Thank you, Ramone and friends. Happy to be here for this, as you say, important topic. Just to be brief, I work at the Human Rights Foundation, a civil liberties organization based in New York, with a focus on helping people who live under authoritarian regimes worldwide. And our experience with Bitcoin and cryptocurrency goes back to 2013. I'll just be brief. I'll provide some milestones throughout our organization's history with regard to this area, and then give some general context as to like what I think are the big issues for nonprofits to think about. In 2010, we hosted Julian Assange at a conference that we produce in Norway called the Oslo Freedom Forum in May of 2010. 6 months later, the creator of Bitcoin made their last public post on the internet, warning people that if WikiLeaks decided to use Bitcoin, it could endanger the Bitcoin project because he or she or whoever Satoshi Nakamoto was considered Bitcoin to be very weak and vulnerable at the time, and they thought that all this additional attention would be bad. In any event, Satoshi disappeared, and in 6 months after that, in June of 2011, Assange posted the fateful tweet on the WikiLeaks Twitter account with a Bitcoin address, started raising Bitcoin. The WikiLeaks organization had its bank accounts shut down by the US government, all of its fintech accounts, Visa, MasterCard, etc. This was the first very clear, demonstration of why Bitcoin might be useful for a persecuted organization or a nonprofit. Fast forward 2 years, in the fall of 2013, we were approached by Ukrainians who were gathering in what would later become Maidan Square. They wanted to raise money through Bitcoin for their efforts. So we teamed up with our chairman, Gary Kasparov, and we did so. Bitcoin wasn't worth much at the time, but it worked for what we were trying to do, which was move value into the hands of people without having to deal with the corrupt Yanukovych regime. And it worked extremely well. And we saw that, and that was interesting to us. The next year, our donors, a handful of them started to ask, could they donate to us in Bitcoin? So we got a simple wallet and we decided to say, yes, sure. I mean, for tax purposes, it's been considered a commodity, basically like property since then. So it was sort of the kind of thing where we didn't think about it that much as a donation tool for a few years. So basically, we kind of ignored it and focused on our work. And then a few years later, oh, wow, it was actually worth a lot more. And in 2017, a couple things happened. We ran our first workshop to connect human rights activists with Bitcoin users in May of 2017. And then later that year had to decide what to do with all this Bitcoin we had received. So at that point, we decided to sell most of it back into dollars to fund programs, which I don't regret. It is what it is. But then we decided to think more long-term about our strategy around Bitcoin specifically, but also other cryptocurrencies. And since then, we've decided to try and create basically like a Bitcoin endowment where if donors want to donate Bitcoin to us, we can do it in a way where we'll agree to hold the Bitcoin for a certain amount of time if they wish. Other times people donate Bitcoin to us and they direct us to spend it. So every organization has to have its own strategy. But I do think that this decade, if you're working for a nonprofit that's going to be around in 10 years, I think it's important to have a Bitcoin strategy. And I think you just need to figure out with your donors, what that is. Do they want you to hold on to it for several years? Do they want you to sell it right away? I think this should be like a donor institution conversation. I don't really think that this is a conversation so much for other people. It should be something that you work out with through your donors is my suggestion, and go from there. We since then have done a lot of programmatic work with Bitcoin because it's very tied closely to human rights. And you see a lot of Bitcoin use in dictatorships around the world and in collapsing regimes and in broken economies. You see tens of millions of Bitcoin users in places like Nigeria, Argentina, Turkey, Lebanon, Palestine, China, Vietnam, the Philippines, Thailand. I could go on and on. Cuba, Bitcoin's huge in Cuba. So wherever there's political oppression or economic fragility or isolation, Iran, etc., you see Bitcoin use. You also see stablecoin use. So we've also had stablecoin donations. A stablecoin is just basically, if you know what a euro dollar is a dollar issued by a private bank outside of the control of the US banking system. Today, there are many, many more euro dollars than there are actual dollars. Euro dollars first were created in the 50s and 60s by Eastern Bloc countries who wanted to use dollars but didn't want to have their funds confiscated by New York. So they opened up dollar accounts in London and Paris. After the 1970s and the oil boom of the Arab countries, this market became massive. And today, again, the US government actually stopped tracking the amount of euro dollars in 2003, but it's thought to be in the many, many trillions. So if you think about a euro dollar, it's just a dollar contract between two parties outside of the control of the Fed. That's what a stablecoin is. It's a dollar contract outside of the control of the US banking system. And the interesting thing about these dollar contracts is you don't need ID to use them. So Tether in particular has become extremely important from a humanitarian perspective in places like Nigeria and Lebanon. Like people will basically take their collapsing currency, they'll go to a broker, they'll give them cash, and they'll receive Tether on their phone. Now they're dollarized. Now they have dollars. It's been remarkable. So the increase in this in the last 3 years alone is staggering. So between Bitcoin and stablecoins, you see a lot of this. You see a lot of people using these currencies instead of fiat currency. You see people using it to move money from one place to another. And then inevitably what ends up happening is these people start to ask you if you're going to donate to them. They want to be paid in Bitcoin or stable coins. It's like for a lot of the people that at least that we work with, it's like impossible to send a wire logistically, or like very difficult, or it could take weeks, or it could get frozen or monitored or whatever. So sending a wire is like a dinosaur technology. I'm sure many of you are familiar with this. If you send wires abroad, it's completely ridiculous. You're like, what year is this? 2022? What? It takes 5 days to send money? What? This is insane. It should be like an email. That's what Bitcoin is. So we often send grants or pay translators or whatever using Bitcoin. Depending on the size of the payment, Bitcoin can either be sent in a way that takes 10, 20, 30 minutes to finally settle. That would be like what we call on-chain Bitcoin, which is totally fine for like a one-off payment or a remittance or a grant, obviously. Much faster than the traditional system. Or you can use the Lightning Network for smaller amounts. So if you owe a translator $300 in Egypt, you can use Lightning Network and it settles instantly, like in seconds. It's kind of amazing. So we use one or the other. Stable coins we can also use. They kind of tend to settle at the speed of on-chain Bitcoin. You're talking less than an hour in almost all cases to move Tether or USDC, which is the other major stable coin. And again, just the number of organizations worldwide that are asking for these things is just on the rise. Recently, we're working with a Russian journalist outlet that has had to flee Russia, and they're now based in the diaspora in Europe, et cetera. They don't have a bank account. They don't have any credit cards that work, et cetera. So they want stable coins. Over time, you'll notice if you deal with Bitcoin long enough that it has cycles. It has bullish cycles, it has bearish cycles, it goes up, it goes down. Over our experience with it, it has gone up a lot, but it is volatility. It has a lot of volatility on the way up, right? Like again, when we first started paying attention to Bitcoin, it was, I don't know, $100 or something like that. Today, it's what, $18,000, $19,000. So it's heading in a particular direction, but obviously for most people, they can't stomach that kind of like short-term volatility. So, my general conclusion is that as a nonprofit, you're going to want a strategy for like potentially holding Bitcoin over this next decade. If you're an organization that has that kind of appetite and future and vision, where you're going to be around in 10 years, you may want to find a way to hold it. And I can get into details later, how to do that. What are the best practices? So internally as a nonprofit, you're going to want a strategy around, well, if we get a Bitcoin donation, what should we do with it? Many just sell it into dollars right away. You know what? That's also fine. But a lot of people will take advantage of this over the coming decade, as we have. And the other thing is just logistically, administratively. I mean, if you do international work, you're going to be using Bitcoin in the next decade. It's not that different from the idea of email versus sending something in the mail. Like at first people were like, this is really weird, this email thing. I don't know what's going on here. It was really strange. And now it's like, of course, I'm not going to send you a letter. I'm going to email you because it's better, right? So I think that's my personal opinion, is eventually that's the way Bitcoin will be seen by people. Today, it's still seen in they're like, this is really weird. What is this whole Bitcoin thing? But I think it's just the same sort of upgrade from postal service to email when we talk about sending payments abroad using a bank wire or versus Bitcoin. So in short, I think you'll want to come up with a strategy as a nonprofit to hold in custody and save Bitcoin. And then secondly, you'll want to find ways, to use it if you care about the people that you're connecting with around the world, and you want to save them time and energy and money. Anyway, thank you very much.
Thank you.
Great, Alex, that was really, really interesting. I'm going to talk about a very different component of Bitcoin, which is mostly cryptocurrency in the United States and what it looks like for the donor population in the US. But it's so interesting because so often people talk about crypto as an investment strategy, and Alex is really getting into some of the initial goals of crypto. It sort of turned into an asset, but it was really originally created as a way to move money frictionlessly in the way that Alex described. And so really, really interesting stuff. So my name is Patrick. I'm the co-CEO of an organization called FreeWill. I'll give you a minute on my background and how we ended up in crypto, and then what we're seeing in the US and in the nonprofit world about crypto generally. So I didn't expect to be in a place like this, talking about crypto, but I have a long history in nonprofit fundraising and then in political fundraising. And for a few years, I ran email fundraising for President Obama after the first election, where we would just run constant experiments to try to make it a little bit easier for you to give $12 or $15 at a time. And one example of that is we found out that if you put the president's photo on a credit card page, you'll get 15% more donations. And then if he's facing the credit card form as opposed to facing away, you get another 15% more donations. And so experiments like this all the time, really thinking about how to make giving easier and frictionless. And so years later, when I was doing my own estate planning, I realized, wow, this is by far the largest gift that anyone ever makes, and it's really hard. And so met my co-founder Jenny when we were doing some research out at Stanford, and realized, oh, if we created estate planning that was actually very easy for people and nudged charitable giving along the way, we might do a ton of good in philanthropy. And that was the origin behind FreeWill, which is now the #1 estate planning tool in the US, generates about $10 million in giving every day. And along the way, as we did that, we got to work with hundreds and hundreds, and now more than 1,000 nonprofits, and really work with them to create solutions to other types of giving that tend to be a little bit complicated, or at least historically. So that started out with giving out of IRAs and stock giving, and in the last year, we've been working alongside hundreds of nonprofits to help them accept crypto for the first time. Alex, among all the people that I've talked to in the nonprofit world across the board, Alex is probably on the far end of the spectrum of how much he knows about crypto. And there's a lot of folks all the way on the other end of the spectrum that know, very little, if not nothing. When we surveyed people, nonprofit fundraisers, on a scale of 1 to 5, how much do you know about crypto? Something like 70% said I'm a 1, and 1% said I'm a 5. And so that tends to be a bit about the norm. And so our work has been helping folks, get set up in just a few minutes and be able to take crypto donations. Now, why does this matter? Well, it matters for 2 reasons. One is, something like 20 to 25% of Americans have used crypto. So we're really moving into an incredible mainstreaming that just wasn't true 8 years ago. There's a fascinating fact that I was talking to Ramone about earlier this week. And of millennial millionaires, there's about 700,000 millennial millionaires in the United States. Half of them have more than half of their wealth in crypto. Half, right? So if you have a effort to get major gifts from millennials and you don't take crypto, it's not a real serious plan, right? Something like 1/3 of them have more than 3/4 of their wealth in crypto. And just astounding numbers. This is from a CNBC survey that went out a couple months ago. Now, one of the even more interesting things is you might ask, well, how do these people get to be millionaires, these millennials? And a lot of people, especially in New York, you might think Wall Street, other parts you might think technology. And it turns out that more than half of the millionaires got to be so by inheritance, right? Their parents had some amount of money. They might have sold a house that appreciated. In a lot of the suburbs and a lot of the urban areas that many of us live in, houses went up pretty dramatically from the time that house might have been bought in 1985. And so there's a lot of wealth here, and that's turning into getting plugged into crypto. And so as we look at the next decade, you're going to see more and more wealth coming into crypto. And those of you that are in fundraising know that getting money out of wealth, getting gifts out of wealth is always more valuable than getting gifts out of income. Ramone talked a little bit about how big the average crypto gifts are. The average cash gift is about $100. And so you can see we're getting 60, 70, 80 times bigger gifts, not from some magic influence, but from changing the way that people give. And so this is why crypto is so important. It has a lot of the value of a stock gift, of a gift out of your IRA, in that it's much larger, and it opens the door to a whole new class of donors who might previously not have engaged with you at a serious level, right? They may have been giving $10 or $20 a month. And so this is really, really exciting. And we're seeing hundreds of nonprofits sign up for taking crypto, et cetera. Now, within that, there are a bunch of options, right? You can take it and hold it, and you can treat it as part of your investment strategy. And that's a interesting, potentially high impact, pretty high effort play. And a lot of folks have a long-standing process of taking stock gifts and immediately selling them. And most people are adapting that same avenue for crypto donations. I think if you can do something more complicated, it's really interesting, but 99% of charities will be taking and selling on the same day. And so there's a lot of work there, and we can talk a lot more about how to put that in practice or what it looks like. But it's really interesting to see these very large gifts from folks who otherwise might be giving relatively small amounts. And so we're really opening the aperture of who we can get large gifts from and changing the outcomes for a lot of our organizations based on opening the door to new, really large gifts. And we're seeing gifts that are hundreds of thousands of dollars from folks that a gift officer would never think to talk to. And for those of you deeper in fundraising, a lot of these wealth screening tools that people use to figure out, hey, how much money should I go ask Ramone for when we have coffee next week, right? Those tools don't surface crypto. And so there's some really interesting avenues and some surprising gifts that are coming through in quite large ways from surprising sources. So happy to talk a lot more during our conversation, but I think this is a rising avenue. There is a ton of wealth here. It opens up new doors and new demographics for you, and it's actually quite a bit simpler than it used to be, and then you might expect in order to get started and take crypto.
Patrick and Alex, thank you so much for this. Very stimulating and provocative. A tremendous gateway to thinking and dialogue around this. I want to swing back to Alex because I'm seeing a question about the fact that you mentioned that organizations need to have a Bitcoin strategy and ideally would be thinking about potentially holding the crypto for maybe as much as 10 years. And we'd like to hear really about best practices for holding Bitcoin for whatever period of time or for as long as 10 years. Can you help us with that?
Yeah. So generally speaking, I'm sure Patrick has thoughts on this. This is a Bitcoin only concept. I think that with other digital assets that you receive, you're generally just you're going to want to liquidate them. Otherwise, it's just a little too risky with other crypto assets. Maybe you want to argue Ethereum is something you're going to want to hold on to. I wouldn't, but I could see that. I feel like I'm 50-50 on that, but everything else is far too risky. So essentially this is for Bitcoin only stuff. But for Bitcoin only stuff, I think just out of our own experience, having held it for 8 years, like it's it can be very favorable to hold for a long time. Now, there's really 3 ways to deal with Bitcoin. There's the custodial way, which, everything's got to be done through the appetite of and expertise of your finance team and your board and everything. And maybe people say, fine, everybody's going to be like a little uneasy about Bitcoin generally. But they may say, fine, as long as it's like held at a bank, basically. Okay, so then you might want to look at, who knows, a company like Gemini or Coinbase or whatever to store your Bitcoin for you. If you don't want to have to think about it. The other extreme is you hold it yourself as a nonprofit, on a hardware wallet, with one of your staff. And maybe you say, maybe you say, well, we're not really comfortable holding it at a bank, but we also don't want to hold it ourselves. So there's a really great option for nonprofits. It's called collaborative custody. It's what we do. There are 2 companies one is called Casa and one is called Unchained Capital. And they both provide this service. And what this service takes advantage of is a technology in Bitcoin called multi-signature. And what this means is that you basically, instead of having like one phone or hardware device or computer that can unlock and move your Bitcoin, you make it 3 of 5. Meaning you have to have 3 devices click OK to move it. So you would have, for example, the company sets up the 3 of 5 for you, and they hold a key. And then maybe you have a lawyer or a board member hold a key. And then you have 3 staff members who live in different places that each hold a key. So Bitcoin's a push system. So if you have an address on the back end that you're sending all the Bitcoin into, you don't need permission from anybody. That can just come in. You can have an employee take Bitcoin off what's called a hot wallet, usually a phone wallet or a computer wallet, that like donations are coming into over time from online onto maybe like an API in your webpage, for example, or an address that you're handing out. That's coming into a hot wallet. And then they're sweeping that maybe every month into your cold storage, which is secured by a multi-sig. And then at that point, you now need 3 of 5, let's say you have 3 C-suite people, a board member, and this company, you need 3 of 5 to move the Bitcoin. This prevents fraud, this prevents theft, this prevents custodial risk, as we're seeing right now in Bitcoin land and cryptocurrency land. A lot of these custodial companies may go under or go bankrupt or whatever over the next decade. It's going to be volatile. So if you have a long-term strategy, I think this collaborative custody thing is really cool. Something to look at. And those companies are willing to like walk you through white glove every step of the way. And I believe they have not discounts for nonprofits. So I'd highly recommend Casa or Unchained if you're interested in collaborative custody. That's if you want to have a long-term strategy. The other piece that's important is like how you accept the Bitcoin from people. For Bitcoin, I think BTC Pay Server is the best way. It's open source. It doesn't collect any information about your donors. It's a really great way to signal to the Bitcoin community that you care about them and you care about Bitcoin. For other cryptocurrencies, there's a variety of ways. You could use the giving block. You could use any number of services that offer, you know, whether it's Coinbase or whatever. There's many different services. One easy way to do it is to have your website say, you basically have a Bitcoin donation API that's right on there that you know, you set up by watching a YouTube video and you install this API into your website. Any tech person at your org can do it. And then for the other currencies, you can just say, if you're interested in donating Ethereum or stablecoins or something else, please contact us. And then you can deal with that like separately one-on-one in a one-on-one situation. So you may have like a Coinbase account or Coinbase Pro account, for example. Someone wants to give you $100,000 of USDC or something. You just give them your address in your Coinbase account. So there's many different ways to do this, and you'll just want to, you know, unpack that and think about that carefully. But I do think long-term, it's worth having this strategy. Again, you may simply decide to sell stuff immediately, and that's fine. But there's going to be benefit to holding on to Bitcoin over the coming decade for sure. And again, you may end up starting to you may end up, if you're internationally facing, there may be times when you want to use it. And it's we don't like buy Bitcoin. It's like, so if some activist group wants Bitcoin from us, we're not going to like convert fiat money into Bitcoin. Like, we're only going to spend Bitcoin if it's been given to us, okay, for various reasons. But anyway, if you have some Bitcoin in savings that your organization has on your balance sheet, and you have a need to send 5K to Colombia or Brazil, and you don't want to wait a week or whatever, and the person on the other end wants Bitcoin, then, you know, you may decide to move some of that off your balance sheet to them. So yeah, it just depends. So anyway, I hope that helps. And I'm sure Patrick has a lot to say as well.
Patrick, do you want to offer something on that?
You know, I'll comment on 2 things. One is whether to hold it, and then 2 is how to accept it. On the first, I half agree and I probably half disagree. So I generally agree that Bitcoin tends to be the most stable of all the cryptocurrencies, and that that Bitcoin is what we call supply constrained, meaning there's never going to be infinity of them. And like anything else in your economics classes, when there's more demand and limited supply, the price will go up over time. So that's a good avenue. Part of what I disagree with is, you know, in the same way that someone might give you a bunch of shares of stock that you might be bullish on, but you're still going to sell it all the time. You know, I would just make sure we're not sort of deferring our endowment or our investment decisions to whatever donors happen to give us. And so it's tricky, because I see the appeal, especially if you think you're going to need it for things like international payments, where it might be helpful to have things on hand. But it becomes a little bit speculation when you've decided that we got this gift and we're just holding it because we think it's going to increase, and it might. But you know, as most of you will know, it will go up and down a lot. And so you'll really be sitting on that. And most organizations tend not to invest their funds in things with that high volatility. And so we see a lot of people sort of move to sell it immediately. Now we also see a little bit that some of the larger endowments, right? And so those are really going to be your very large national organizations and your sort of most successful higher ed are dabbling a little bit in crypto as part of their overall endowment strategy, but it's sort of a thoughtful risk blend alongside other things. And so, there's a variety of ways to think about it, I think. And then on taking it, there are a couple of avenues. There's some, it really falls into two categories, right? The first is you create your own wallet and you manage it. And Alex sort of mentioned a little bit of how that can work. And then the approach that we use is we actually partner with a nonprofit that functions almost as a real-time donor advised fund. So that nonprofit will take the crypto, liquidate it immediately, and just send US dollars to your organization. And that tends to be pretty easy for folks who don't want to go through the wallet setup process, which can involve a bunch of sensitive information and some other things. And it also will sort of have all the coins in one place. And so that really works if you're in the sell it immediately. If you're going to hold it for a while, you need a more sophisticated version, sort of similar to what Alex was describing. So one other note is that while Bitcoin tends to be the largest, certainly the largest by market cap, we see a surprising number of large donations coming from less known coins because ownership of those tends to be relatively concentrated. And so that's something that surprised us along the way, where you get a $200,000 gift in a coin that we have to go look up to see if it was real. And then we process it there. But some of these early coins, people bought them for a cent, now they're worth $300,000, and they're delighted to give a third of that to a charity they love. And so that's been really interesting. We've been surprised and wrong a dozen times in the last year along the journey. So I'm sure other folks that have been doing crypto have as well, but some really interesting experience there.
Alex, I saw a smile come to your face. Was that a reaction?
No, I was just laughing at that. It's true. I mean, yeah, if you and your buddies made a cryptocurrency out of thin air and you got an exchange to list it, you probably now have a bunch of money. And yeah, why not? I mean, sometimes they'll donate. I mean, I would say there's a couple flags I would have. I'd be careful of some of these coins that you have to look up. Oftentimes they're trying to use your reputation. So they're trying to basically say, oh, we're partnering with this nonprofit, and they're just grifting. They're grifting. It's important to note that of the 20,000 cryptocurrencies out there, 99% of them are Ponzi schemes or scams or whatever. They're going to go to zero, and they were made for no other reason but to enrich the creators. So they're not going to have there's not going to be a noble intention behind their gift to you. And maybe you're fine with that, and that's cool. But oftentimes they try to apply like strings. They try to say, oh, well, we'll give you this coin if you don't sell it for a year. Like, again, some random coin you have to look up. You really got to be careful about stuff like this, and always happy to provide feedback if you're interested. And my DMs are open on Twitter or whatever, but always happy to make a suggestion. But I'd be very careful about coins you have to look up. I'd be even careful about taking them because then that company may try to use your name, your good name and reputation in a scam to try and scam people. So be very careful with that. And then again, the default may just be sell the Bitcoin. But for a lot of organizations, I mean, this decade is going to be very important. Charity Water, for instance, has an interesting approach where they're basically saying any Bitcoin that they receive, they'll hold for 4 years and then sell. That's interesting. That's an attempt at trying to think about Bitcoin's historical 4-year cyclical cycle, where its monetary policy changes every 4 years. There's many, many different things that will be devised over the coming years. The point is that you should just have a strategy, and maybe your strategy is we just sell it, and that's fine. As Patrick is saying, that's certainly, it's weird because I certainly wouldn't call it the lowest risk option, because you're risking that it doesn't go up. Like, and if you're an organization that's going to have a balance sheet for the next 5 years, and you have money that you're literally trying to find a way, you're trying to put it somewhere. Right now, you're trying to figure out, is it a money market fund? Where are we going to put this money that we have? I mean, you're struggling because stocks are down. I mean, there's nothing is really making a lot of money right now. You're trying to store value, right? And over a 3 to 5 year period of time, I mean, Bitcoin's going to be one of the more interesting things to hold. So I wouldn't call it low risk to sell it right away, but certainly would be the most conservative approach, I would say. But in general, like, you'll want to have a robust conversation about that. And look, you may even want to put a statement on your website saying something like, we convert all crypto assets to dollars to spend on program right away, unless the donor advises separately. And then maybe that's a flag to certain, because some donors in the Bitcoin space really want you to hold it for some time. They want their gift to grow. So that's just something you'll have to sort of discuss with donors. The last thing I'll say is that donations are cyclical. Like, we're in a bear market right now in this industry. You're just not going to receive as many donations. You're going to get a ton of donations at the end of these bull markets, especially towards ends of years. So like the end of last year was crazy. There was just so much money floating around, and that was great for nonprofits. So you want to position yourself for that. Now, you know what, that may not come around again for another couple of years, but you want to position yourself for that for sure. The second thing is, a lot of activist groups often think this way. Just because you accept Bitcoin doesn't mean you're immediately going to get a bunch of donations. That's not how it works. You go ahead and you put it up on your website, you send an email out to your list, hey, we're accepting Bitcoin or cryptocurrency or whatever. That does not mean you're going to get a single donation. And I'm sure Patrick has his own view on this, but you have to kind of still work for those donations. As he's saying, maybe some profile of donors who normally would just give you $100 in a bull market, maybe they give you a lot more in crypto assets. But in general, it's not some magic pill that you take and all of a sudden you're getting new donors. You have to hustle and get out there and do what you normally do. It just provides like more variety, more options, more tools, both on the incoming side for donations and then also internally, again, for your organization. Very importantly, if you're an internationally facing organization, it provides a new payment rail that you might be able to reach people with whereas, normally you're dealing with this nightmare of bank wires. So hope that helps.
Absolutely. The risk that you were talking about, and maybe Ponzi scheme, et cetera, being careful. There's a question or two that's come in from one individual that indicates, can an organization do any kind of vetting of people who are donating crypto before it comes in? Question has to do with nonprofits who have to be careful of accepting donations from people or organizations who may be greenwashing themselves or their organization by donating to a cause. Also, can an organization turn down a crypto donation after it's been sent? Send it back. There are a couple of questions in this. Any reflection on this, please? Sure.
So let me first sort of note on Alex's point, which I think is spot on, that a good threshold is there currently a liquid market for this coin? If not, you might want to turn it down. And Alex, I love your thoughts on this. My guess is there's about 150 coins that matter, and it's sort of a logarithmic curve, right? There's like 2 that really, really matter. There's a bunch that matter. There's a bunch that are aren't worthless, and then there's a lot of worthless. And so that's there. Historically, the answer, it depends on how you take it. So if you own your own wallet, people can send things, and there's no blocking system, right? There's no spam filter. You can also, receive things that are, many of you have heard of NFTs. You can receive an NFT to a wallet. You can receive a what you might call a not safe for work NFT without getting too descriptive. And there's not an immediate way of blocking it. But most people who sort of know the blockchain well say, well, that's okay. Like, that person didn't mean to, they're going to get rid of it, whatever. But there's no sort of, giant drawbridge you can pull up. And that's why some people prefer the sort of like donor advised fund model or something else, where you can basically say, hey, $10,000 gift came in, and for some people, not having donor information is a plus, right? Especially if you're dealing with activists and dealing with autocracies, and for if you're the American Red Cross, having donor information is a must, right? And so there's a big different thing, because you want to thank and steward those people. And so we have a couple of nonprofits we work with, particularly in the environmental space, who are afraid of greenwashing. and don't want to take gifts from Saudi oil barons or whatever. And so we can sort of check before we process the donation through to them. And our terms of service just say, look, if an organization can't accept your donation, we just send it to GiveWell's Maximum Impact Fund, which is sort of a collection of some research around maximum impact on human well-being. Usually it ends up being things like bed nets and deworming pills in sub-Saharan Africa.
I think it can be helpful to the attendees in terms of definition. I know that for a lot of folks that may be hearing the term greenwashing for the first time. Can you guys define that for the attendees, please? Greenwashing?
Why don't you go ahead, Pat?
Sure. So greenwashing, it's a play on the word whitewashing, which basically means an organization which may have some negative environmental impact will make a donation to an environmentally friendly group as a way of aligning themselves. So that's what greenwashing would be. Or in some cases, it's sort of eco-friendly branding in a way that is sort of in contrast to the actual impact an industry or a company is having.
Patrick, that's helpful.
Just quickly on that last point before the greenwashing. If you have a Bitcoin interface, I wouldn't recommend it, but if you're just posting an address on your website, or what I would recommend is using something like BTC Pay Server, yeah, you can't stop people from donating to you. That sort of thing is done with the philosophy that you want to protect donor privacy and that you want to take donations from everybody. That may not be a fit for your organization. In that case, yes, using a donor advised fund would be the better route. That way you can screen incoming donations, et cetera, et cetera. So that's just an important thing to note. But go ahead, Ramone.
That's helpful. There's another question here, and maybe a portion of this or whatever was covered in an earlier comment, but how will sending Bitcoin differ from sending via Western Union or something similar for international nonprofits? Isn't it easier just to send cash?
I mean, anyone who has done that before will know that it's not easy to send cash via Western Union. There are some situations where, there are like many different levels of Western Union or TransferWise or Revolut. It depends on the connectivity of your counterparty. If they are in London or something like that, it's possible that they pass all the checks and that you guys can essentially Venmo each other. That's fine. That's not going to work in Nigeria or India or Brazil, et cetera. For most of the world, that's not going to work. It's not going to be that seamless. There's going to be high fees. It's going to take several days, and it may require your counterparty to drive somewhere to physically redeem the exchange. This is how it is normally for people around the world. The normal experience for humans on this planet in dealing with an international payment for the average person is something like that, where it's just a huge pain. It takes half a day. It's very expensive. It could get lost. A lot of people use the Hawala system. Like they just trust somebody to send the money, like a broker. That's the average experience for the average human on this planet. Of course, most of us on this call live in the dollar system or the euro system. We're hugely financially privileged. There's only about 1 billion of us in the world that live under societies that have rule of law, property rights, democracy, and a reserve currency. The other 7 billion don't. So for them, it's not so easy to receive funding like that. And it is extremely easy for them to receive Bitcoin because they can just download a free open source wallet and in minutes or in seconds using the Lightning Network, receive your money. Now, what do they do with it? That's on them. I mean, maybe they decide to hold it. Maybe they go ahead and convert it. The beautiful thing about Bitcoin compared to other cryptocurrencies is it's globally liquid anywhere. Whether you live in Havana or Gaza or Tehran or Moscow, doesn't matter. It is very easy for you to find someone who's willing to buy your Bitcoin from you in exchange for something else. That cannot be said for Dogecoin or whatever. Bitcoin has this network effect that makes it very useful as a payment rail. And you'll often find fintech entrepreneurs who've realized this. So there's this fabulous app from Nigeria called SendCash. It allows any Bitcoin user around the world, like anyone here, could buy $100 of Bitcoin and you use SendCash, and you can send $100 to any Nigerian and have it immediately deposit into their bank account as Naira. And behind the scenes, the company's using Bitcoin as the rail. That would be impossible using the fiat system, the legacy banking system. So I would say that there's a lot of benefits to using Bitcoin. If you're an organization that's out there making international wires all the time, I mean, this is just so much simpler. Anyway.
That's helpful. Patrick, I don't know if you want to take that on also. There is another question coming in. You guys want to field the new question?
Just one other thing to remember is that the Western Union is almost extortionary in their fees sometimes. And so, a country like the Philippines lives, 10% of their GDP is remittances. And if 10% of that is going to Western Union, it's a huge loss to the families and to the whole population. And so, Bitcoin is also appealing for many people. The people you're paying are just going to get more of it in most cases.
Absolutely. We've got a question on building relationships with Bitcoin crypto donors. Bitcoin was born as a response to the 2008 financial crisis, a failure of institutions, plus a vision for a better world. In common, nonprofits by nature also have a vision for systemic change, working to make a better world. Yet nonprofits are institutions. How do you think about balancing some donors' potential anti-institutional sentiment with encouraging support for nonprofit institutions? A lot to think about there.
I'd be curious for Alex's thoughts, but one thing I'll start with is it's easy for us to imagine the crypto owner as like a libertarian male software engineer in like one of two cities or someone else outside the US. And we really shifted to widespread adoption. Just 53% of folks who are interested in buying crypto this year are women. One of the fastest growing populations of crypto owners is the over 65 segment. And so there's not some sort of magical separate population that doesn't already care about your organization. A lot of these folks are already part of your community and giving, and we've seen the giving over the last few years where people are giving to institutional nonprofits. Now, there's certainly a subset of folks who are doing some really interesting stuff, like funneling money directly to the Ukrainian army or to Ukrainian populations outside of the institutional system, and that is an element, but it's certainly not the only one. And so, if you're talking to somebody who is potentially a donor or a major donor, you can bring this up as one of many options, and you'll be surprised. You can even survey your own staff who definitionally work at an institution, and my guess is that at least 1 in 5 of your staff members owns crypto as well.
Yeah, I mean, the latest poll from CNBC is 1 in 5 Americans have owned or used Bitcoin and cryptocurrency in some way, and we're very early. I mean, by the data, we're essentially if you remember the rise of the web, we're in 97 in terms of the growth rate and the growth penetration of Bitcoin globally. So you can think about what happened from 1997 to 2007. We went from the dial-up modem to the iPhone. I mean, that's what's going to happen in the next decade with regard to this technology. So we're very, very early. And there's a lot of opportunity for you to, be a first mover in the space. I think that you should expect skepticism. I mean, people are very underinformed about Bitcoin. There's a lot of myths about it, and those myths are very hard to break or shake. Yeah, there's this idea that it's some like libertarian fantasy, and you know what? Just like email, there are aspects of it that are cool for libertarians, sure. But guess what? Marxists use email. It's like, again, like email is just better than mailing something in the postal service. And you're just going to see more and more people start to appreciate this over time. Oftentimes it's necessity that forces people to use Bitcoin. An example I'd give is in Nigeria, the Feminist Coalition, which is a women's rights organization there. They had all of their bank accounts frozen during a protest against the government. And they had no other choice but to use Bitcoin. And they ended up raising hundreds of thousands of dollars, including from Jack Dorsey, for their movement. This was about 18 months ago. And they are, politically extremely progressive. So I think it just depends on what scenario you're in. But over time, you're going to see more and more of this. A lot of environmental groups, which are skeptical about Bitcoin, have had their bank accounts frozen before by whether it's the Indian government or even the US government, and they're going to need a payment system that can't get frozen. So I think you're just going to see the perspective on this change. I think in the next 18 months, it's going to change a lot. especially as we look at energy in the United States. I think usually the biggest apprehension about the space is specifically with Bitcoin and its energy use. And I think once people start to understand, and I won't get into this, it's too complicated, but basically Bitcoin is very good for energy grids and it can stabilize them and make them much more efficient. Once like power companies start to understand this, and once governors and state people who run state power grids start to understand this, you're going to see Bitcoin mining all over the US, and it's going to make for a much more efficient grid system and much more renewable grid system. Once that starts to happen, and we're like in the second inning of that, like there's a bunch of governors already that are very pro Bitcoin mining. There's a bunch of power grid companies that are already pro Bitcoin mining, et cetera. You'll see the conversation start to change completely, but we're not quite there yet. I mean, I would say by 2 years from now, we'll be in a very different milieu. But right now, for various reasons, you're still going to have a lot of skepticism, which is why you make it voluntary and opt in. If people want to give you Bitcoin, great. I would, don't be too aggressive about it. I would kind of put it out there, kind of, accept it if you can, come up with an internal strategy, maybe offer it as a payment if you have international staff or contractors or translators that you work with, maybe mention that you're happy to pay them in it. I would take it slow, be cautious. And, we're all students here. This has never happened before. so we're all learning every day. And with that, I have to run, Ramone, but I'm really grateful for the opportunity to be here. It was super, super great to do this with you, Patrick. And again, my DMs on Twitter are open, and Ramone can pass along questions to me as well by email. But really grateful for the opportunity to talk to you all today. Thank you so, so much.
Alex, thank you very much. I'm sorry you have to leave, but we understand rich information that you provided. Thank you very much. So I was going to say that the Biden administration in late 21 issued an executive order that opens the way, so to speak, for exploration and participation in this space. But around that, do we think that regulation is near to follow? What are your thoughts, Patrick?
Well, regulation is interesting, and it certainly seems to be approaching. It comes from a few areas, right? So part of it is tax regulation, part of it is securities regulation, and those are probably the two big ones. The security side is slow to develop, right? When people are offering a new coin, is that like an initial public offering where you should be registering with the SEC, or is it like a garage sale where you can just sort of sell property left and right? On the tax side, we're seeing basically an announcement that in 2024 we're going to start to see more IRS crackdown and more IRS collaboration with the major exchanges. So things like Coinbase will start turning over some more records potentially in 2024. Now, that's actually good news for charities, because one of the great reasons to donate stock or donate crypto is that you avoid capital gains taxes and you get a full federal income tax deduction. So it's almost always better to donate appreciated assets than it is to donate cash. And the more that people think about it, the better off they are. There's some recent research that shows about a little more than half of crypto owners don't know they can donate it. They don't know they can donate it at all, let alone the tax benefits. And so as nonprofits start to educate donors about that, you're going to see a dramatic increase in giving, which is really, really exciting. In terms of, the one other regulation that people ask about is, well, how are you thinking about tracking payments? And organizations like Coinbase, which is one of the largest exchanges, have enormous teams focused on what we call AML, anti-money laundering. And something like Wells Fargo also has a big team focused on this that will work with Department of Homeland Security. And so you're starting to see some, better cooperation with law enforcement there. Now that may have a downside in authoritarian regimes, but in terms of life in the United States, it's much more similar to the way we look at money wires and bank transfers and things like that. So you'll see it become more and more normalized and mainstreamed and just look a lot like the way we treat banks, the way we treat the stock exchange, the way we treat initial public offerings and things like that.
Thank you. And maybe the program staff can help me with this, because I did see a couple questions in the Q&A, but they've since disappeared. And one had to do with some references that Alex had made and whether those can be available to to the folks who are attendees. And maybe one of the program people can send me a chat or something to let me know if that's going to be possible and how we would do that. And secondly, there was a question about whether this recording will be available afterwards. And the question I have is then, if so, then how would they be able to access that? Can one of the program staff help me with those two questions?
Ramone, it looks like some of this might be answered in the chat in writing. And so Lonnie says that the resources and the recording will be available on the event page after the fact. And that they'll be able to share some more of what Alex wrote, because I'm sure some folks are furiously taking notes in that 3 of 5 discussion.
There's been much discussed today, much presented, that's answered, I think, a lot of questions that we've had generally about the existence of cryptocurrency, how it came to be, what the opportunities are, how it's exploding, what considerations there are for our organizations. And as you know, there'll be a greater dive into organizational considerations during the series on July 7th. And then we'll be looking at the future, the road ahead on the 14th. I don't see any other questions coming in. Patrick, might there be any other comments you'd want to make or things that you'd want to raise that could generate some questions?
You know, I think I would start with the thought that in a few years, we will consider this to be a boring topic, right? We're not that, we don't get super excited about different finance mechanics or bonds or PayPal anymore. At one point, credit cards were wildly controversial and challenging. And as I think we've learned, there's some upsides and downsides, but they become boring. And, radio, television, VCRs, DVDs, airplanes, cars, newspapers, cell phones, all these things sort of come with the same level of interest. Remember there was a moment where we thought that beepers, remember what a beeper was, a little pager, that pagers were only used by drug dealers, right? And then it sort of turned into the mobile phone and turned ubiquitous. And Bitcoin's on that journey, the same way the web went on that journey and things like that. And so, while the future is exciting, at the most important moment, it will have become boring. And that's when you know that crypto is just sort of part of the here to stay. When no one ever asks, is it crazy? Is it dangerous? Whatever. It's just, we don't think about currency, which is itself a radical concept, right? That you might have paper that I can exchange for goods and services at any point I want to. And it doesn't even matter, which piece of paper I have, they're all relatively the same. And so I think that might be where we're headed with crypto. And in that sphere, within the next 2 years at minimum or maximum, but maybe even sooner, you'll just see every nonprofit take it. It's going to be highly unusual to see organizations that don't take it. The same way that every meaningful organization now takes gifts of stock and other things like that on top of, and certainly virtually every organization takes credit cards in a way that at one point wasn't true.
Yeah, Patrick, your comments are sage, absolutely, as we look at the past and as we see what's happening now and what this portends for the future. And one thing that it portends is that there's great opportunity. And however, we do know that with opportunity does come risk, and we need to be careful to minimize that. And we've heard something about that today, which is making sure that we educate ourselves, that we develop organizational strategies associated with this, and that really importantly is that we continue to work through our donors, what our donor populations look like, what our messaging is going to be, what our relationships are. Very, very important. We're pleased again to have been able to bring this to you. And we look forward to this ongoing dialogue with you and having you participate in our July 7 and July 14 session. Patrick, do you have any concluding remarks you'd like to make?
I think we've said so much. I would just wrap up with a big thank you to everyone who joined. I think it's going to be a really important part of your careers in the nonprofit world. It's going to be a really important part of meeting your missions and funding your missions. And just hats off to you all for joining as we look into a long weekend, there are plenty of things you can be doing around the country. And so grateful to have you here and really appreciative of the opportunity, Ramone.
Thank you, Patrick, so much for lending your expertise and enthusiasm also. Much learned here, much stimulation. We thank also the attendees. Stay with us, take a look at us on the website. As was indicated, this will be available along with references. So thank you, everyone, and have a good evening and good holiday weekend also. Best to you all.